Everybody, this is Jim at SP500chart.com. It's after the close on February 21st, 2013. We had more selling today, confirming the breaking of that red ascending channel that had been working all year long until yesterday. We're going to take a little bit closer look at things after I read to you this important word. And that is that the website and this video are for educational purposes only, and nothing stated at the site or in this video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research, and you should be making investment decisions that are suitable for your personal financial situation. I am still not a licensed financial professional, but I am still just a guy who draws lines on charts. So let's take a look. Starting with an hourly chart here, you can see that we kind of have a channel that had been working all year long that was also possibly, we'll see, part of an even larger channel. What we'd been watching for the entire duration of 2013 was the action bounded by this support line and this resistance line. Now, I'll be the first to tell you that this resistance line is not perfect, but remember, in a bullish trend or an upward ascending channel, it is not that unusual for the top line to run ragged. And likewise, if you are in a descending channel in a bear market, it's not unusual for the bottom line to run ragged. Why is that? Well, when you are ascending, you have buying pressure. And for some reason, the selling tends to be, what's a good way to put this? Where you find support tends to be more regular. But you may have times, particularly near the end of moves, where the top begins to run ragged. So, for whatever reason, that may not be a perfect explanation, but the observation is still, I think, perfectly legitimate. And that is, in bear markets, bottoms run ragged. In bull markets, tops run ragged. So here we're looking at this channel between this line and this line. It is now extremely obvious at this point that the channel has broken. It was pretty obvious yesterday, but we didn't yet have that 1% that I like to see, and that many technical analysts say that a 1% break of a healthily priced stock. And what I mean by that is a stock that is not a penny stock, because penny stocks can go up or down 10%, and who notices? I mean, that's not really a break, because if you're dealing with a 50-cent stock, a 1-cent move is 2%. But I'm talking about, we're dealing with an index here, where we have such a broad base, and because we're up in the 1500s, it's just real easy to stick to that 1% rule. So now we have broken this red channel. I'm kind of expecting a back test, just because I think the kind of strength that this market has shown us, the willingness to bounce after a sell-off, I'm expecting a bounce. And we may have seen a little bit of the makings of it today. And I'm going to do something, I'm going to erase our diamond lines over here. We know, just remember, Jim pointed out that diamond pattern and it worked. That's all I want you to remember. The target to that pattern was about 1530 and change. We got up to 1530 and change. Once we got up there, then we started to sell off. Now, areas that used to be support should now become resistance. Even though we got over our long-term brown resistance line that's been working for almost, for how long? 3 years, 2.5, 3 years? Even though we got over that line, remember the rule. When you get over a ascending resistance line, you cannot count on that line to hold as support. And we really saw that in this case. We got over that line for a full day, and then part way through the second day, just plowed back down through it. It's not going to, they just don't hold. Now, if this had been a descending line, then you got a much better chance of that line being turned into support, even though it used to be resistance. But this is an ascending line. Now, if we take that and invert it, here's an ascending support line that's broken. Now we would reasonably expect this line to become resistance. Now I'm going to draw a preliminary line on the chart, and I'll be honest with you, I think I have a little bit too much of a tendency to do this because I want to try to, by the way, when I was like in my early teens, I was an amateur magician, and there's this something in me that always wants to do the spectacular thing, you know? So sometimes I want you to take, when I speak about a pattern that might form, that's my attempt to become a mind reader, to become a seer into the future. But oftentimes these things do work out. And so, I mean, I'm not doing it willy-nilly, but keep in mind, a pattern that looks like it might be a pattern is nothing until the pattern completes and until it confirms. So what I'm going to draw is this line right here. And I am looking at the potential here, just something to watch out for. I think we could certainly say that this line has shown in the past to be a pretty good predictor of support. We bounced right around that line again today. Let's see if we now get a bounce to test some other areas that we would expect as resistance. And by the way, this line right here could also be acting as resistance, because here it was support a number of times back in the middle of February, and we are now underneath this line. So I think that's another potential resistance line we should consider. I'm going to get rid of this black line. We're going to clean things up just a bit. So here's what I'm looking at. We are looking at this level down in the 1470s as a likely, fairly strong candidate to produce a bounce, because it has twice already. And this would be the third time. If that were to fail, then we really don't come to anything until we get potentially down to this level where we were before we had that gap up on January 2nd. So if the wheels were to come off the market over the next week and a half or so, we could be looking at a, quote, closing of this gap. And it's not because that gap has negative pressure and it's sucking the market back into it. It's just that gaps tend to create selling pressure, and when selling pressure starts to take over, then it's easy for those gaps to get filled. So it's a little complex here, but what I'm trying to say is this. I'm just trying to spot some areas where I would look for a bounce, spot some areas where I would look for resistance, and hopefully, as this starts to get sorted out over the next number of days, hopefully we will either come up with some pattern that gives us a predictive that serves as a predictive pattern, or we find a channel that again would serve to predict something. Right now all we have is a break of this channel, and we haven't wiggled around enough yet to see any indication, take that back, any clear indication of either a channel or a pattern. So right now all we know is this red channel. It looks like the party's over. Are we going to come down here, bounce back up to this line, and then come and take this out? Maybe. Are we going to break this line tomorrow, come down to 1473, and then head back up? Maybe. I just don't know. And I don't think anyone does. Can we now count on this channel to continue working? No, we cannot. So this nice run is over. Look for this line around 1515 to be resistance. If the S&P can overcome that, then potentially back to the mid 1520s, mid high 1520s, but I would expect pretty strong resistance there. And it's possible that we stay between these two lines, because this has shown support. This now should be resistance. If we were to bounce around between these two lines for a little while, then what we would be forming would be a little head and shoulders top. And if we do get that pattern and it breaks down, then we have to consider the implications of what it would mean to take this line out, because if this were to happen, this line would likely go. In which case, we're probably looking at getting back down to late 2012 levels, which would be great. You know, if you've got dry powder, then we look for a nice downward move, something that has predictive quality to it, and then we will be ready to act when we get down there. But for right now, too premature to call anything other than this upward channel has now broken. So guys, I guess that was a long-winded way of saying, like Dandy Don, if any of you guys are old enough to remember early Monday Night Football, Don Meredith used to sing a song when it became obvious that a team was going to lose. What was it? Turn out the lights, the party's over, or something like that. So as far as this channel goes, turn out the lights, the party's over. Now we're trying to take in more information to see when we will turn back up. I'm still not willing to short this thing. You know, until we get a major top in, I'm not willing to short. I'm willing to be content to be in cash. So, guys, I just want to share one more thing with you before I go. And I woke up to I didn't wake up, but I took my kid to school, and then I got back and saw that I had been stopped out of a nice trade. I had bought some shares of Nautilus, that's NLS, for like $2.30, and it was up over $6. And I put a stop in at 5.58, and I knew better than to just put a stop, but I did. And Nautilus didn't trade for about 6 or 7 minutes this morning, Then they ran it down to take stops out. My stop at 558 got taken out. There was about 157 or about 160,000 shares of volume on that move. My shares, which were a small percent of that, got taken out today at the low of the day, 48 cents underneath my stop. So the lesson is this, and I should have done it, and I knew to do it, but I just didn't. The lesson is this: if you're going to do a stop limit. A stop limit order would have meant I would have said, okay, if 558 gets hit on the ask, then I'm willing to part with my shares. But I'm not willing to part with them for a penny less than 554. If I had done that, I would have saved myself hundreds of dollars. But instead, I got stopped out in a I mean, it was still a great trade, but I just hated that happened. So, stop limit order, consider that. I'm not giving you investment advice, just consider it. I think it makes sense. So guys, thanks for watching the video. Thank you for your support, and let's see what the market serves up to us over the next days and possibly weeks to show us where we expect the next upturn, or do we form something more serious? In other words, let's let the market complete the picture a little bit more. So thanks again for watching. Take care.